I will be going over the two trades that I took on March 8th and the exact trade reasoning behind why I actually took these. And the first one was on ES. First of all, I have to clarify that these times are not right. I don't know if it's because I'm doing this on Sunday or whatever, but I'll show you guys in a second that I'm not lying. This you can see right here, NQ 1505. It says that's when I bought, and if you go to 1505, that's right here. If I would have went long, you could see I would have got liquidated. So this is definitely not real. This is definitely not right. And this trade that I took was not at 11:16. It was up here at like 10:20 something. So you can see one more time just so you know I'm not lying. Buy time 15:05, sell time 15:10. So one more time, you can see here's 15:05. You can see if I would have went long, this trade would have not been a winner. So you can see lost 200, made 440. But just wanted to clarify that beforehand. But I did make a mistake on this ES trade. So what I did was I had FOMO. I want to make that clear. So this was a bad discipline trade on my end. What I was looking at was this 5-minute fair value gap, and I wanted to see a push into this 5200 area, and this 5193 is the high of the day, so I wanted to see that break since we were engineering all these equal highs in here. So what I was looking for was a turtle soup. I saw these this low here, got ran, pushed up, failed, ran it one more time, and I liked that we um, broke above this candle here. So what I was in right there. I went long inside of this area, and I was targeting high a day. And you can see shortly after, this trade did not work out. So my risk management looked like this. I was entering at the bottom of this volume imbalance, and I had a 4-point stop, which was right here at this wick. And you can see this trade did not work out. I should have never been trying to long at all-time high a day, especially with the crazy divergence. So just a bad trade overall. But I do want to be transparent. I do still make mistakes. This is a bad um, form of discipline. I need to definitely brush up on that this weekend before heading into the new week. But not going to hold that over me. And I'll show you guys this next winter trade. You guys do have to be thorough. I want to make this clear. You do have to be thorough and harsh on yourself to be able to make it in this industry. But you can't do it to where you're like building a bad relationship with yourself. And this whole game is just you versus you, so you do really have to have a healthy mindset and a healthy amount of mental capital each week to be able to do this to yourself each and every day. Putting on risk each and every day is something that not a lot of people are able to do. And just you do have to be harsh, like I said, but make sure you're like giving yourself encouragement, reinforcing yourself, reinforcing good habits, good behaviors. But this is the next trade that I was taking on NQ, and there's a lot of good gems in this one. So first of all, of course, I want to start on the higher time frame. I was wrong on my drawn liquidity this week. I did tell you guys in my two last videos I was anticipating this 826 level to get hit, but now it looks like we're going to be headed for this next few sell side targets this week with CPI. But I had this 1 hour fair value gap marked out after we got this huge dump, which was warranted. I wasn't surprised when we got this. Like I said, I was bearish biased, even though I missed this move up. But I was marked out this 1 hour fair value gap. So then I went to the 15, wanted to see what was going on. And you can see that we got this 15-minute change in the state of delivery. It's also a 5-minute. In real time, I was on the 5-minute chart, so I'll teach on that right here. Mark that out. We want a candle body closure above this body of the candle, and you can see we get that exactly at 2 o'clock. Now I was looking for a 1-minute setup. So what I like to do when we get these kind of explosive moves up like this, I like to use my standard deviations to find the silver bullet zone. So this isn't an ICT thing that he teaches. This is from Dexter Labs. ICT does teach standard deviations, but not the silver bullet zone. Dexter classifies the 1 to 1.5 area as the reaccumulation zone before a second leg of distribution, and this is a good area where you're able to find fair value gaps or order blocks, breaker blocks, whatever you like to enter on. Preferably, I like to see fair value gaps with every form of different PD array. So we have our lower time, or we have our 5-minute change in the state of delivery. We have our silver bullet zone here. And what I like to do is find old highs that line up with the silver bullet zone and a fair value gap. So you can see that we have two fair value gaps here, 1 and 2. And you can see that price is in like kind of a hurry. It's not really expanding, so you don't have to keep your order like super tight to the fair value gap, but you also don't really want to be relying on this fair value gap. So that's what also ICT teaches. If you have two fair value gaps, you can either go to a higher time frame and enter on like the 2-minute instead of the 1-minute, or you just have to be able to have good risk management and you're able to just have a stop loss that doesn't invalidate your trade. So I was looking at this first 1-minute fair value gap inside of our silver bullet zone, and what I like to do is enter off of old highs like this. You can see this is the highest high between this cluster, so I like to use that one. I do think that's a sensitive point, and that is inside of our silver bullet zone and fair value gap. So that's where I got filled at 205. My stop loss on this, I'm going to delete some of this stuff. My stop loss on this trade was right here, or actually right here at the bottom of this candle. So I was risking 16 points for a 20-point take profit. I don't necessarily have to have a 2R trade. I also didn't want to stay around and manage this trade, so I just wanted to get in and out. And I also only have one contract, so that doesn't allow me to have any runners. You can see this trade ended up running. But so I got filled, 16-point stop, never even came close. We ended up hitting this fair value gap, like I said, could happen. Barely wicked into it and then gave us our move. But this is where I want to get into some more education. So you can see that we have a lot of engineered buy side liquidity up here. This is what you want to be targeting when you're anticipating a move higher. This is what happens when smart money moves from the sell side of the curve to the buy side of the curve. You can see that the smart money reversal has been put in for the session. How do you tell? When you have a market structure shift like this, you get a wick through, or you can wait for this high up here. But if you're more advanced, and I was anticipating a reversal from that 1-hour gap, which was that gray fair value gap that was here, you can anticipate these fair value gaps and down close candles to support price. And if not, guess what? You're wrong. That's why you have a stop loss. If you mark out these order blocks, why is this an order block? Fair value gap. It's not as high probability because it didn't sweep liquidity, but there's a fair value gap and you get a market structure shift, and you get that 5-minute change in the state of delivery. So you can see that once you get the 2022 model out of a smart money reversal, that's when you know that you're on side. And what that means is you get market structure shift, fair value gap, and the fair value gap is supporting price to the upside, and that's what we got. Now you're targeting buy side liquidity. So what I was looking at was that entry, and I was targeting this high here. Why was I targeting this high? So when I reverse engineer ICT, when there's like this one long wick like this, and he's just trying to get in and out, like a 20-point move, that's like almost a bare minimum for NQ. Obviously, you can take and trade however you like, but that's what he speaks. 5 handles on ES or 20 points on NQ, just because NQ is more volatile. But I wanted this high instead of this one just because I know that this is high resistance liquidity. It's going to be harder to get up there for most of the time unless you're really starting to get a lot of market movement. But I also wasn't anticipating that much more explosiveness since we did have this huge sell-off already. There's been a lot of good moves already. So don't always know how the market is going to react. You also don't know if your take profit's going to hit. It's not a guarantee. Not every single high or low needs to be taken. ICT likes to target either a few points of off the wick or a few ticks, or he'll target like the 50% of the wick. And you can see the 50% lines up with this high. And vice versa. He will also do bodies of the candles if they line up, because the algorithm references bodies of the candles more than it does wicks. And you can see what happened. I literally had a market fill order at the exact price at 99.75. I don't know if Tradovate will even say that. Yeah, see, okay, so this is how you know that I'm not lying. Sell price 99.75. I got filled right here 77.75. That was on this candle. 77.75. What was that? The high of this candle, like I said. So it was actually one tick above that. So I must have moved it, but regardless, you know that this trade was legit. I'm not lying. You could see what happens at 14.10 or 2:10. We get our fill, and then guess what? Price retraces back down into that 1 minute fair value gap, and then ends up exploding higher. So yes, you can hold for this, but what I said earlier, I wanted to get out. I was already on the charts for a lot in the morning session. I wanted to enjoy my weekend. I'm very glad that I was able to catch some points on this trade. So I just want to reiterate why this trade was very high probability. 1 hour fair value gap, we can mark that out. 1 hour fair value gap. Go back to the 1 minute or the 5 minute. We'll go to the 15. 15 minute change in the state of delivery right here. Fair value gaps getting created. That's a very good sign. 5 minute change in the state of delivery as well down here, so you can get in even earlier. That's why I like to use the lower time frames, but you have to know what you're looking for. Buy side liquidity is being engineered from the sell side of the curve. A bearish PD rays are being disrespected. You can see right here we get a candle closure over now, and then it retests it, leaving a breakaway gap. These down closed candles are now being used as support. You can see that price touches this high right here, doesn't even gap into the fair value gap. That's why this leaves as a breakaway gap before taking out this liquidity. As you can see here, comes back into that fair value gap once again. But ES, like I said, FOMO trade, bad discipline, 4-point loser, keep the losers small, but I also should have never taken this trade. NQ, really nice snipe, glad I was in and out. But just remember, stay positive, keep reinforcing good habits, and learn from your mistakes, and you'll go super far. I hope you guys enjoyed this video, and I'll see you in the next one.